Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so we're going to talk about new homes. We'll start with the article. We read this article. They just came out with the data for housing starts for new homes. As most of you know who follow real estate news, it dropped. Okay,
Yes.
U.S. housing starts dropped to a 13-month low, and the number of building permits fell. This is not surprising with interest rates.
Right.
Keep in mind, though, that building has been ramping up the last year. So the fact that it fell, it's falling off of highs.
Right.
Like,
So a couple things. I've said this before. New home builders are the canary in the coal mine, right? Because they're very sensitive to a lot of things. They're sensitive to material costs. They're sensitive to labor costs. They're sensitive to interest rates. So why did the number of permits drop? Well, they dropped because, remember, the homes that they're pulling permits for now, they're not going to be able to sell or close on at the very least for 6, 9 months, 12 months down the road, right? So because of that, they're looking at these interest rates going up. They're looking at the continued uncertainty of materials and labor, and they're saying, you know what, we're going to back off a little bit and let all of this sort itself out. And then when things sort themselves out, then we'll come back into the market. Home builders, they got hurt during the Great Reset, or whatever you want to call it, and they are very cautious. So they are proceeding with that caution going forward. They're building enough to kind of stay open as far as keeping their doors open, but they're not building enough to get hurt with the rise in interest rate and all the other uncertainties. So this is kind of the take on why they're doing this. Now, how does this affect the housing market? And this is the really big question: is they're doing this, but our inventory shortage has not been relieved, right? So what they're doing is they're saying, okay, we're going to build less. But when you're building less and there's already a shortage, what does that do to prices? Well, at the very least, prices are going to still increase. How much is questionable, and of course it's market by market, but just kind of broadly speaking, when you've got an inventory shortage, then prices will still increase.
U.S. home building fell to a 13-month low in May as permits tumbled, suggesting the housing market was cooling as surging mortgage rates reduced affordability for many first-time home buyers. So let's talk about this real quick, because you did mention the thing about we have a shortage of homes, and home building, we're still not, for 13 years straight, we've been below the average, long-term average for number of homes built. So we're in a shortage. Now it's going the wrong way because interest rates are going up. So we're in a point where we have the shortage of housing, and rising interest rates are actually making it harder to build houses. We need more houses. So, well, yes, there are people out there who say the higher interest rates potentially is going to cool the housing market, cause prices to fall. Long term, this is bad. Like, it's bad for the housing market if you're trying to buy or think about buying, because there's still not gonna you're just pushing this problem down the road, right?
Well, part of it is that they're pushing out the road, but it's still present today, because if they're building less homes, then you have less opportunity to buy a home, right? There's lower inventory. Lower inventory still equates to more people chasing fewer houses.
A survey on Wednesday showed the National Association of Home Builders sentiment index hit a 2-year low in June, with a gauge of prospective buyer traffic falling below the break-even level of 50 for the first time since June of 2020. This is a gauge. It's a metric that home buyers use based on how many people come into new home subdivisions. So this National Association of Home Builders works with all the builders, and they say how many people came in. They track that. That's why they want to register you. So they go, 40 people came in today, 30 people came in today. They know how many people need to come in to sell all the inventory. And they're seeing this drop, so that's why they're trying to not overbuild, because they don't want to lose money. Right? They don't care if they don't say, look, we need to build more houses because of America. They don't care about that. They just go, we need to make money. And if we overbuild, and then let's talk about this, because you know about this. Let's say that this is a median home right here. Our new homes tend to be higher than the median or lower than the median?
So interestingly enough, new homes tend to cost more than the median.
Okay.
And you're getting less for the money, which makes no sense to most of us, but that is what happens. And the reason I say that is because a comparable new home tends to cost more than a resale home, but a new home is not just that price out the door, but then it's things like landscaping, which it usually doesn't have, and window coverings, and appliances, and all this other stuff that that a home buyer has to put in. Window coverings, all this jazz. So that's why I say you're getting less. The other thing is that it is more likely that with a new home, you're getting a smaller lot than with an existing home because they tend to be on bigger lots and that sort of thing.
New home builders also, there's economies of scale.
Right.
They build a bigger home because they get more money out of it. They don't want to build small homes because if you build a 2,000 square foot house next to a 4,000 square foot house, the 4,000 square foot house doesn't cost twice as much. And that means the 2,000 square foot house isn't half as much. So maybe the 2,000 square foot house is 300,000. The 4,000 square foot house is 500,000. So it's not linear. So they actually it's a lower cost to build per square foot a bigger house. So they tend to build bigger houses. It's not cost affordable to build a smaller house. And then people, because of some people have a stigma about, I want to get a new house because I want it the way I want it. Yeah, I hear that all the time, right? So they go out and buy a new house because I don't want to live in a house somebody else lived in, right? So you pay a premium for that.
Absolutely.
And the builders know that. So
so there are other reasons. So people like new houses because they tend to be in new communities. New communities tend to have new schools. They tend to have parks and all these other amenities that new communities have. So people do like new communities for that reason. The other thing to keep in mind is that builders, not all the builders, but a lot of builders do not build all these homes for cash, right? They actually have to borrow money in order to build these homes. So that is another concern that they have. They're going to have all this debt to service on housing inventory. So if it takes them a while to sell homes, that's debt that they have to service, and so that lowers the profit margin, and so that they're very concerned about that. Now, that does not apply to all builders. I mean, there are builders, particularly national builders, that are sitting on a ton of cash, and they're not quite in the same position, but they are not in the business of losing money, so they are very sensitive to what's happening out there in the market, and they can afford to be cautious because there's no reason for them to not be cautious and get caught with their proverbial pants down again.
The 30-year fixed rate mortgage up 25 basis points last week to an average of 5.65%, the highest level since November 2008, according to data from the Mortgage Bankers Association. Builders get double whammied when interest rates go up. First of all, interest rates go up, loans become more expensive. It's harder for them to sell their product because it costs the consumer more. The second thing is, remember, they're not just sitting on a ton of cash that they run out and pull out of the bank to go pay for stuff. They borrow money from banks to build these houses. They're borrowing. They don't just have infinite amount of money. So they borrow money, and their borrowing cost goes up because as interest rates go up in cost. So that's the whole idea of raising of how interest rates is a way to tame inflation, because it just costs people more to do stuff. So people back off, and you have less money circulating around the system, because that's what inflation is. It's too much. It's the ratio of money chasing goods and services. So they choke off the money chasing goods and services. And the key is, how do you do that without killing the economy? Because you need money. You need to inject new money for new businesses and for existing businesses to borrow.
Right. So that's what all the stimulus checks were about. Remember, a couple years ago, that's what that was all about. But now that's kind of coming back to bite us in the hiney, because now there's all this money chasing everything, and there are less goods and services available for all of us, and that's just pushing up the price.
Building permits for single-family homes declined 5.5% to a rate of 1 million units, basically. Stats for housing projects with 5 units or more dive 26.8%. That's bad. Multifamily housing permits dropped to 10%. Those are actually really bad, because we need these units, but because single family homes are just, what a single family home is. But these multifamilies, these are apartments, these are complexes where they may be like an 8-plex or something like that.
So this is the rental inventory that we're talking about.
Yeah, these are all rentals. These are not anything you would buy. These are rental properties. Your core rental properties. So maybe you saw, they're building a new apartment complex, and maybe there was 30 new apartment complexes going in your city all over for all the new people that are moving there, but now there's only 16 going in or something, right? There's a lot less. And that affects the housing market, because now what that does is that pushes people into rentals, and then it pushes rents up.
Right. So, anecdotally speaking, I do have people that are constantly calling me and saying, hey, I need a rental and I can't find anything. And this is happening everywhere. It's to the point where in some markets, rentals don't even go in the MLS. You actually have to call property by property manager hoping to find a rental. We actually had a client that needed a rental in another market, and that's what I ended up doing for him. Is I ended up calling just property manager by property manager until I found a rental for him, and that's how he got a place to live, because there is no reason for these property managers to put their rentals on the MLS, because there are so many people seeking rentals that these properties are getting rented before they even come on the market. And that's what happened in this case. This property was rented before it even came on the market.
We have a shortage of about 4 million properties in the U.S. that is going to grow based on this. Because remember, we only grow the housing inventory by building new. And building new, which we were almost up to the long-term average, this doesn't catch us up, this just takes us to the average, is now going down again. So the other thing this long-term makes the housing shortage more. The long-term trend is that home prices keep going up. This is an upward trend for home prices long-term. The short-term trend actually means that more people now will be pushed into the resale market because they can't go buy a new home. They'll have to go buy a resale home. And even though rates are going up, we're now pushing more people into the resale market where it's already crowded with a bunch of people chasing the same homes.
Right. And kind of by extension, this is not helping inflation, right? Because we still have more people chasing fewer homes, and that's still pushing prices up. And we're aware this is not happening in every market, but it is happening in enough markets to still have this impact on inflation. And so this is kind of spiraling out of control, really. And the Fed is trying to manage it with the tools that it has, and it's left to be seen whether that's really going to work. We got here very quickly. I don't think this can be unwound as quickly as we got here.
Yeah, the increases in rates are certainly going to. If you take a balloon and you put your finger in one side and you push on it, it doesn't actually change the total amount of pressure in the balloon. It just changes because it has to go somewhere, right? So with the housing market, it's a closed system because you have houses that people either buy or live in, and you have all the people. They don't have anywhere else to go. You have to live in a house. It's not like there's some alternative thing. I'll just go to the airport and live there, right? I guess you could be homeless. That's unfortunately that is the thing. But this idea that there would all of a sudden be all these empty vacant houses with on the market, no one selling, really doesn't make sense because we still have this high demand. And we actually needed this 2 years ago. We needed interest rates to start going up 2 years ago. In hindsight, we should have started raising interest rates when all the money started giving out for COVID. That would have tamed the housing market. We would have come to a reasonable level. Now it's overbought, and while it potentially could, median prices could certainly go down. When you look long term, it's like pulling on the rubber band. Yes, you could pull the rubber band down, but which way, when you let it go, is it going to go? It's going to go back up because of the long term. You have this shortage of homes. And it doesn't matter, the interest rates go up to 10%. That's great. That's fine. But what happens the second they go back down? Everyone floods back into a short housing market, and maybe home prices go down 5 or 10%, but then they shoot up again. So what you're seeing, this 20% is not speculation. The appreciation we've had the last 2 years is reacting to long-term systemic shortage of homes, which is why we are saying the housing market will not crash. We never said it wouldn't go down. We never said it wouldn't go sideways. Certainly interest rates are affecting it, but this idea that, when we see home builders now, new home builders cutting the number of homes that they built, the opposite happened in the last housing crash. Home builders were building like crazy, going into it as inventory was rising. We had a home builder come in my office one day because he found out we were doing all the bank-owned homes. And the builder said, hey, what are you seeing? And I'm like, we have 26,000 houses on the market, and the banks are coming to us to sell all of these houses. And he goes, I've got 8 subdivisions, and we're not selling anything. And I go, well, you got a problem then, because we're getting ready to dump all these bank-owned homes onto the market. Guess what we're not seeing now? two things we're not seeing. We're not seeing bank-owned homes, and we're not seeing all the new home builders that are building like crazy.
Right. So it is a different scenario than the last time around. It'll be interesting to see how it goes forward. Let us know your thoughts. Give us your feedback in the comments. We do like to read your comments. Please like the video, share the video, hit the notification bell, subscribe, and we'll see you on the next video. Bye.
Bye.